Hello, Uranium friends. We are back with episode 4 of Uranium Talk, talking all things uranium. I am Jungle Funk from the Chart Guys, joined here by Chris, Red Devil. Chris, how was your Thanksgiving?
Hey Joe, how you doing, buddy? It was gluttonous, as most Thanksgivings are,
Yeah,
I
as it
guess.
ought to be. Same over here, working the food coma into day 2. So,
You had a little bit of an oven faux pas, from what I hear. No?
yeah, you got two ovens. You turn on one. Who really knows which one's warm, which one's cool? Sometimes you accidentally put the turkey in the cold one. But nonetheless, we got fed. So all is well on that front. Um, so enough about that. Let's talk about uranium. Today in this episode, we're just going to detail out pretty simply the bear case and the different degrees of bear cases for the sector and the bull cases and different degrees of bull cases. So we'll just dive right into it. Chris, you want to take the lead on this?
Yeah. So I think that we've hit on this before. The main thesis of why, at least I'm here, is that whole supply demand imbalance, no doubt. But when we start to get into the nitty gritty of it, where are we now? Because inflation has kind of hit us. So um, what are the signals we're looking at for fundamentally as a bull case scenario is that we kind of want to start to see spot price make its way up. Right? We need to see a rise in spot price, to be quite honest with you, because that it just indicates that there's larger buyers going through there. So what we've been seeing now is the action in the spot prices is literally just hovering right around the $50 area, which is fine, right? But at some point, for us to get the bull thesis back in motion, we're going to need to start to see these spot prices start to hit the $60, $70 range, because estimated most of these miners, that's going to be the incentive price. A couple of years ago, the incentive price was like 50, $55, right? So we're there now, but inflation has kind of taken a bite out of that whole thing. So, if the incentive price was still 50, $55, well, we'd be starting to see a lot more mines open up, and we just haven't seen a lot of that yet. So we do know Cameco has restarted MacArthur. And we do know that Global Atomic is now breaking ground on their DASA project, which is all good signs. But, there's a lot of mines still in care and maintenance, and we need to see that spot price kind of get to the $60, $70 range. Now, we can chart that spot price. We can track it a little bit through the UX1 futures. I think, Joe, you have a chart of that?
Yep, got it pulled up
Okay.
here right now. We'll zoom on out, look at the monthly. So, yeah, we can see that back in 2011, after Fukushima happened, spot price just got decimated along with the rest of the sector, and then dropping below the profitability threshold is what ended up leading to a lot of the mines rather, getting shut down and whatnot. And now, from 2016 onward, we've got this steady grind up. And if we zoom in a little bit here, we've got nice clarity. We got a nice monthly 12 EMA support. So we can kind of use that as a guide of, is this spot ascent remaining healthy and continuing on track, or are we going to lose this monthly 12 EMA? And then if we zoom on out, that would end up being some quarterly consolidation, where we then look down to this quarterly 12 EMA. So we've got our EMAs cross bullish on this quarterly chart, so we hope that that quarterly 12 would provide support. But basically, we can use this as a guide for the pace of spot progression. And the bulls want to see that 12 EMA remain at their feet. And if we pull down below, that would be a little tick in the bear column. So we'll just be keeping eyes on this.
Yeah, and it's obviously taken a little bit of some time here to develop, but we really want to see, again, that $60 to $70 range. So we'll be keeping an eye on that. The next thing that we want to see for our check in our bull thesis area is long-term contracting. Now, we're seeing that, but it's not widespread right now. So, Cameco has disclosed some long-term contracts. We don't know what the details of those contracts are. Kazatomprom has detailed some long-term contracts. Some of the smaller guys have here and there, but we want to start to see those long-term contracts flow in, because when you get the long-term contracting, they need to have the pounds. So if they need to have the pounds, they're either going to be buying it off the spot market or they're going to be digging it out of the ground. So the prompt for the big bull run that supposedly everybody thinks may happen, these are the that need to line up. But we're starting to see small inklings of it. Not enough yet. We'll be keeping an eye on it. So and that also holds. The next point is the mine restarts, right? So long-term contracting is going to prompt spot price buying and mine restarts and things of that nature. So that's really where the crux of this bull thesis is. Now, these things were not part of our thesis. Like China didn't announce that they wanted to build 350 nuclear reactors 2 years ago when we were looking at the supply-demand imbalance. So we still have that supply-demand imbalance, and now we've got the added kick from China and Japan, and even Germany has finally broken down and conceded that hey, we got to keep our remaining 3 plants open at least until next year, till we can get a handle on this energy situation. So it's kind of where the bull thesis stands at the moment. But I think we do need to address the bear thesis.
Yeah, definitely got to talk about the bear thesis, because this is the definition of a high risk, high reward sector. And there's multiple degrees to the bear thesis, as we talked about in the beginning. And obviously, just to get it out there, there's black swan potential here that doesn't exist in a lot of other sectors. And we've seen it once before. So that's something that everybody operating in this space just needs to be aware of.
Yeah, so our black swan, this sector's black swan, is a significant nuclear disaster. So if we get a natural disaster that prompts a nuclear accident like we saw in Fukushima, it's a black swan. Everything that you own could go to complete garbage. Okay? Does a nuclear situation that's going on in Russia prompt this same type of situation? Well, it could, right? But we have seen over the past couple of months a lot of reports about shelling near the Ukrainian nuclear power plant, and Russia actually took it over. The International Atomic Energy Association is there monitoring things. Could it get worse? I guess it could. Could you consider that a black swan? Yeah, possibly. So you got to keep your eyes out for that. There is a black swan here, and this type of thing could happen on the weekend, and you wake up Monday morning and CCJ is down 40-50%. You have to be aware that there is a black swan that is looming, regardless of what your thoughts are on the next decade with nuclear power. So it is something that we have to keep an eye on.
Yeah, and that's when proper position sizing and everything comes into play. No matter what your position size is, if you wake up to a serious gap down like that, you're going to be hurt. But that's, diversification. No matter what your conviction is on something like this, you certainly don't want all your eggs in one basket. And it's another call to potentially hedging things out. If you've got a deep uranium portfolio, then holding some puts or something like that is not an awful idea, because that can help kind of stem some of the pain from a potential black swan scenario. But,
yeah, so I've talked about it multiple times. I like to trade around the core. This is my way of trying to hedge, right? So all I'm trying to do is just keep reducing my cost basis on the shares that I'm holding, and so buying some weakness and selling into strength is really kind of where I'm at with it, and I'm not really, my portfolio, it's probably like 25-30% uranium, I'm probably not going to go over that. I would like to. I'd like to, maybe I wanted to go all in, but I'm not going to do that with this literally no control looming black swan. But there are a couple other things that we need to lay out for the bears, and we do know general market is affecting the sector, not as poorly or as badly as many other sectors are, but it is taking a little bit of a shot because of this, and it makes sense, right? Because this is a high beta sector, it's a very high risk sector. So what happens when people need to deal with margin calls or just want to in general risk off? Well, they're going to take the riskiest stuff off for sure, and if they're fairly solvent in those positions, which people that got into this sector 2 years ago, they're kind of fine. They're on cruise control, right? So their entries are fantastic, and they can absorb a little bit of a drawdown in profit. But what's their number? We don't know. But everybody's individual tolerance changes, so you have to know about that. There's another thing we have to know about, and that's we don't really have a full handle on secondary supply. So it seems like secondary supply is drying up, but we don't rightly know. So, there could be some sort of swoon in secondary supply that starts hitting the market. And these larger players might be buying that up, and that could drive the price of spot down, which will drive the price of the miner equities down. And then it'll stop these mining companies. Again, it will prevent them from from opening up their mines. And that becomes a double-edged sword, right? So if they don't open their mines, well, then maybe we still have a little bit of a supply demand imbalance because they're not digging it out of the ground, or there's so much secondary supply that it's just driving the price down, and that could kill these mining companies as well.
Yeah, definitely worth being aware of that possibility, because basically a big part of the bull thesis is that imbalance between supply and demand. So whether it be like a regulatory thing where it becomes like way easier to start mining it, so more people are doing it, or whatever, it's with it being an international market, it's tough to pin down where these regulations end up falling.
And
But
really, technically, you can chart this dynamic literally, and we have already. So when Fukushima disaster hit and Japan shut down all their mines, well, guess what? The market got flooded with secondary supply from Japan. That was it. So if you think that can't be a bear thesis, well, it is, because we've seen it. The charts can show you that it's actually happened.
yeah, absolutely. Another element that we do just have to be aware of is, so obviously 2022 has been a very bearish year for the broad markets in general. But when we look around, we can see that energy has done quite well in 2022. It's been the most bullish sector out there. So if we were to see money rotate out of energy as a whole, that would likely knock uranium down as well, and these miners down. So that's something we need to just be keeping an eye on, watching XLE. And I can actually pull up the XLE chart here real quick. And
yeah, you can watch XLE as for correlations, and if you spend a little time on it out there, and maybe you put, you'll do like a Euro XLE or a CCJ XLE ratio, you can start to see how they correlate and how they've correlated over the past couple months, over the year, and what's going on now. So it pays to pay attention to XLE.
yeah, definitely. And we can actually see over the past like 6 months or so, uranium has been bearishly correlated to XLE. It's kind of dropping on down. And we can, if we just look at the CCJ XLE ratio chart, we can see that that while the move off of the 2020 lows, uranium performed stronger than XLE, but now we're just kind of slowly slinking on downwards. Certainly not seeing much follow through on these lower lows at this point. But, just got to be keeping an eye on the energy space as a whole. And XLE, as we come up to these all-time highs, not adjusted for dividends. If we adjust for dividends, we're into blue skies. But yeah, just got to we know that funds are constantly rotating through the markets. And if we see a rotation out of energy, then we just got to know that that would be a bit of a headwind for uranium. But something we can be keeping an eye on to kind of gauge these. So there's obviously so many moving parts, and it can be kind of difficult to pin down correlations and are we stronger, are we weaker, or this or that. But one thing that we do have is a very nice bit of clarity is this URA over SPY ratio chart. And we've talked about it a few times here. And this essentially is showing the strength of uranium compared to the broad market as a whole, comparing it against SPY. And we've got a nice picture perfect monthly equilibrium here. So we can say that if this equilibrium breaks to the upside, then the bull thesis is continuing to get traction. And if it breaks to the downside, then the bear thesis is getting some traction. So the degree to which the break happens, or to how the break happens, will let us know like the degree of how these bull or bear cases are playing out. Like if we see a full-on bull bonanza in the uranium space, this ratio chart is likely going to see big time follow through on a bull break. If we see energy funds rotate out back into tech, then there would be the potential that this ratio chart breaks bear. And obviously, if we see a black swan of a nuclear disaster, then this ratio chart would plummet. So definitely going to be keeping eyes on this.
I like the term "full-on bull bonanza."
Yeah, that's what everybody's hoping for, right? That sounds fun.
That's what a lot of people in this space are looking for. Okay, we're looking for it too, obviously, right? But at least we're trying to stay a little bit grounded with our technicals here.
Yeah, and you've got to be always got to paint the other side of the trade and understand, because you never want to get blindsided. You never want to, like, basically, if you have a thesis, you don't want to be searching for things that confirm your thesis, because you've already got your thesis. You want to be searching for things that poke holes in your thesis. So
look for the other side of the trade. If you're a bear, you want to look for the bull side. If you're a bull, you want to look at the bear side. No two ways about it.
Yep.
You got it.
Exactly. So, and that's why I really just love this monthly ratio chart, because there's no lack of clarity there, and we'll know which side, bull or bear, is getting check marks in their columns based on the way that this breaks. So, going to be keeping eyes on that. And as we wrap things up here, we'll check in on a couple other charts. So, speaking of tightening ranges, we've got a really nice one on CCJ on this 2-day time frame. We've kind of been watching out for it, and it ended up being what we're getting, that we're continuing to tighten up here. So I'll zoom back out to the monthly. As we look for another potential monthly higher low compared to this 2002 level, we can say that the direction this 2-day chart breaks will let us know, are we getting our monthly high or low? If this breaks to the upside, that will be the case. And if it breaks to the downside, then we will be risking losing our monthly uptrend for the first time since the 2020 lows. So that will have implications for the sector as a whole. So we're watching that tightening range. We've also got eyes on this cap tightening range that continues to tighten. So, and a note on cap, Chris, they just had some earnings.
They reported a
700% year over year or something like that.
Yeah, they like 7x their year over year. I haven't dug heavily into any of the filings, and I'll probably lightly go over it. But there are some, that leads me into the next thing, because I wanted to give you guys a couple of Twitter follows.
Yes.
So you could, fundamentally, if you want to follow the space a little bit. So we've put together a small list for now. We'll probably be adding to who you should follow down the road, but if you're not following these guys right now for truly a fundamental view of the space, I would suggest that you go out there and you do so, because they're constantly pumping out some good information, and you can glean information from that, just on the health of the sector a lot of times, just on the right guys. So I've spent like 2 years filtering through some interesting follows on Twitter, but these are the guys. Obviously, if anyone doesn't know, if you know the space, you know that you want to be following John Quakes. And we have a screenshot. We put together the list. Do you have that?
Yeah, we got it up. We're looking at it.
Okay, so it's up. I don't see that, but
yeah.
So we got John Quakes, and he's like anything and everything uranium. So, and he's always pumping out content, and it's good to keep an eye on him. We got Art Hyde. He's like I think he's like a hedge fund guy or financial dude, but he follows he follows the space as well. So I would check him out. Jeff Geringer is a former nuclear fuel buyer. I believe he just got hired by Cameco, so he's a pretty good follow. And these guys, Jeff is fairly unbiased on stuff that he throws out there, along with another guy, Clay Montgomery. He's another impressive fundamental guy, and he's not just sitting there going when moon and all that stuff. So he's kind of trying to give it to you straight, and he looks a little bit deeper into some of these goings ons within the sector itself, and not necessarily at the stocks or the charts, but implications of certain geopolitical events or anything of that nature. So he's also a good one to follow. Uranium Insider, another one to follow. They've got a pretty good handle on the space on Twitter. And also Lawrence McDonald, who is the publisher of Bear Traps. So Bear Traps is a fairly widely subscribed to institutional newsletter. So he's more, the hedgies, all these guys are kind of following him. And you'll see, if you start to follow him, you'll see like, they're usually positioning, mainly playing URNM and CCJ. So sometimes their calls on the buy and sell side can move things a little bit. So it's good to keep an eye on them. Did I miss anybody? I don't think I did, right? Oh, Cupperson, you got to catch him too. So he's really an energy guy overall, but he does like the uranium space as well. So for now, those would be the guys, the plays, the follows to start with. And you can see them up on our screen, and we'll list them down in the comments as well.
Yeah, we'll throw all those follows down in the comments, and yeah, that's that. We'll have to keep watching this 2-day tightening range on CCJ in the short term to see what we get across the sector, and then bigger picture, we'll just keep marking tallies for bulls and bears as we look to see. Are we going to see a uranium bull bonanza, or are dreams going to be crushed?
The uranium bull bonanza.
All right, everybody. That's all we've got this week. Hope everyone had a nice holiday and enjoys the long weekend off of the markets. And we will see you next week for another episode of Uranium Talk. Over and out.
See ya.